the Trading Market Technicals morning call video for Tuesday, February the 11th. Markets took a little bit of a breather yesterday. Nice consolidation day. Dow Jones up about 7, Nasdaq up 22, S&P up almost 3 points, and the Russell up 2. Last night in the Far East, we had a real nice green up day in the Asia markets. Shanghai was up about 17, Nikkei up 255, 1.77%, and the Hang Seng up about 1.78%, 383 points. And Europe is following suit, all green across the board, FTSE, CAC, DAX. So it looks like we have a risk-on environment, which is actually pretty nice to see after a consolidation day. Now, we are at some key areas of resistance, which I want to point out to you guys, and we're going to see if this market can indeed break through this resistance. And if it does, then I think that you'll probably get a challenge at the highs. However, again, I am still suspect of what this rally has become. Very low volume. We had one good day on Friday, and yesterday we paused. So to me, I think this is a little retracement rally, and I'll show that little chart segment for you guys, and telling you the reason why. Now, remember, not saying to go out and short the market by any means. What I am saying is that when we're coming into some key pivotal resistance areas, we need to be aware of this, because if the market fails there, then I think you're going to have a deeper downside correction. Now remember, this move is only about 5% maybe. Logical corrections are typical, actually, would be about 8, 10 to 12%. And that's just norm. I mean, we can get down to a 20% correction. But I'm not saying that that's in the cards or it is going to happen, but you have to be aware of that going forward. All right, I want to show you the bullish percent SPX, and as you can see, this is still on a sell signal. The only thing this is doing is retracing back to about 50% of the move that we've had. Here's the SPX line chart. Again, I'll show that to you in the chart segment, but if you can see here, we actually just, it needs a lot of more work before we can get some sort of a buy signal like we did here. But now we're at the lower end of the range. So it's gonna need a lot of work to push to the upside. So this is a caution for me. This is a red flag that I am going to watch. Now, it doesn't mean you can't take longs during the day if you're day trading, obviously. But if you're more of a swing trader, or you're looking to build positions, when on the move lower is where you want to be building a position, not as we are retracing. Okay, stocks above the 50-day moving average. As you can see, we just literally are retracing back that sell-off we had last week, actually the last 7 or 10 days. So back to the lower end of this symmetrical triangle, to me, will show that markets will pause and start to roll over again. Now, that's what I'm looking for. I'm not saying it's going to happen. We can literally start to break back up higher. But if you could see, the retracement is very, very weak. Okay, it's going to need some sort of a catalyst. Now, remember, Janet Yellen, the Fed chair, is speaking at 10 a.m. this morning. I don't think she's going to say anything other than keeping a steady keel of what Ben Bernanke has done prior to him leaving in December. We all know that they're tapering $10 billion. I don't think she's going to say anything to Congress at all to razzle the markets at all. So to me, I think it's a non-event. But again, you never know. Let's take a look at the VIX. And as you can see here, the VIX, I have the circle, great call again. That will give us a buy to the equities. And we, sure enough, we've rallied over 50 S&P points in a matter of a week, less than a week. So now we're back into this area of support. We have the 200-day moving average, the 20, the 50. So this could be a good spot for a launch pad for another move higher again. So remember, we want to be aware of our surroundings. So even if the VIX pulls in a little bit and the market pops up another day or two, I would be looking for some weakness here. Now, again, I got to emphasize that I'm not looking to have anybody looking to short the market at the moment, because obviously short was really the wrong play of 2013. And right now, 2014, since we just started, hasn't been that great. But again, shorts have been rewarded. Now, I could definitely see a change in sentiment. I mean, there's no question about it that now the market just seems a little more tired, sluggish, and it's just not. I don't see that full force of that buying euphoria that we had in 2013. Take a look at the McClellan Oscillator. Again, another area where we would look for that little sell-off again. We have plenty of room to the upside. We're not even overbought. We're in neutral territory. So this could actually excel much higher. So we have this bull and bear case right now where we are, but we're coming into resistance here, and that's why I just want you guys to be aware of. Okay, let's take a look at the U.S. dollar. And the dollar, see, this is another problem for me. The dollar right now, if the markets are strong and we're in this raging bull market, the dollar should be moving up with equities. And that should be the relationship. Right now, it's not. It looks like it's breaking down here. So if the dollar does break down from this ascending triangle, I think you're going to have a good spot of why commodities are moving higher. You have gold now looking to break out, and gold is in a bear market, no question about it. Gold is in a bear market, but you could get a real nice retracement rally, like I've been pointing out for the last several weeks, back up to that 1300, and I will show that to you in the chart as well. Crude oil now above 134 dollars, so weaker dollar will give you will bode well for commodities. Okay, so let's keep an eye on that as well. Now, speaking of gold, let's take a look at that. As you can see here, we have higher highs and higher lows, bull flag, bull flag, bull flag, and now we're at this resistance area where I think a 1300 or 1312 test of this 200-day moving average is actually normal. So we could get that blast out, and that's another concern, right? Why would gold be going up and the market's actually retracing? Well, markets are retracing from that sell-off. So to me, it could be possibly building into that fear factor trade again. Take a look at the WTI. And again, guys, I really like this crude oil trade here. I had a bunch of emails. Do you buy it up here? Absolutely not. Now, we are above this area already, and we could break out higher. This is $176. So we're not that far away. We're 135 in the pre-market right now. But you buy the pullback. You don't want to be buying breakouts, especially up here when crude oil had a big run here from $91. Okay, so a pullback, a nice bull flag, and then another catapult. You could probably see 102 here, 103. Easy, because we have these little volume zones, the thin zone area, where price just literally sucks up to the next area of supply, which would be up at that 102, 103 area. Okay, but I do like the crude for a day trade. Sure, I mean there's no reason why you can't. All right, now let's take a look at the Asia rim here. Shanghai had a big day yesterday, which is a good sign. That is a good sign. Also helps out commodity prices as well. So we did have this little consolidation, slight little pullback. And then boom, we broke out of this consolidation area. Chinese New Year is over on Friday, so they came back with a vengeance yesterday. So now let's see if this thing gets bid up. But remember, we have a little bit of overhead resistance here. We have the 50 and we have the 200-day moving average as well. But this is also a decent sign. What's concerning is the emerging market ETF. This cannot get out of its own way. We have the 20, the 50, and the 200. And we've got the death cross here. So this is a little nerve-wracking to me anyway, to see that. I like to see this break out above and really start to get above this area. Then I think that we'd have a lot of the worldwide markets humming in as one, and then we would move higher. But right now you don't see that. You have a mixed market here. Let's see China. Again, China can't get out of its own way. Now, remember, last night's data you're not going to see until today. So, but let's just again take a look and see what happens here. Just to me, still has a lot of work to do. Okay. Now let's get into the chart segment. Now we have the Japanese yen. Now another bearish sign for equities, right? We have an inversely correlated yen versus U.S. equities, risk on, risk off trade. This to me is just a bull flag into some heavy support. If this does break out, you got to watch out, because now we're going to get that trade, that risk off trade, money flowing into safe haven currencies, utilities, gold, commodities, and of course the yen, and then the dollar would sell off. So now, right now, we took out this bearish symmetry of lower lows and lower highs, base for a couple of days, and now we have higher patterns of higher highs and higher lows. Bull flag. If this does break out, I would think this would probably cap the markets, and then by then it's a logical spot for that pullback, and I'll show you here in the ES contract. Now this is this morning's data right now. This is the we're up about 8 handles, so a very good sign that we can push a little higher, and my target's going to be about 815, 820, and I'll show that to you in the chart segment. But what's happening here? Look at the volume, lower lows, lower lows. These volume bars are not any encouragement at all to me, except we had one day on Friday. Okay, now obviously the session hasn't started yet, but I want to see this volume start to pick up. All right, now took a Fibonacci retracement from high to low, from this low, and right up in here into that 815, 820 will get you a 78% retracement, logical spot for a pullback, okay? And as you can see, if I go all the way back, you'll see a lot of the supply right up in here, right up in this area here. And then you go back a little bit more, you can see there's continued areas where we broke down, we held, we broke down. Now this is going to be a pretty decent resistance area. So I'd like to see about 815, 820, and I think that would bode well with what's happening now. We're, like I said, we're up about 8 handles. So if we can push up and then maybe push up tomorrow morning, I think the markets will probably sell off a little bit. It just doesn't look like the markets are strong like they were back in 2013. Okay, here's our visual chart. SPY spiders, yes, back testing this channel. What happened here? Gold is breaking out. Now, bonds have not broke out, which is okay. But if bonds start to break out and gold can complements that, and then you have a push in the VIX and a push in the yen, and that is a concern. That's going to be a very big concern. It's going to tell me the markets are pretty much over for this retracement rally for the time being. So let's watch this. If you have NinjaTrade or if you have Olay, just do each individual chart, put them up, overlay it together. This is actually a very good way of gauging risk on, risk off. Now, again, this is what I'm on. This is my concern here. Right into the 20, we have to still clear the 50, and we're coming into resistance here. So this is why I'm telling you. And look at the lower volume. Barely just got above 20. Very weak market we have here on this retracement rally. Our leader, the transportation ETF, the IYT. Look at the volume. Just dismal. I mean, this is not a good sign for me. So what's going to change my opinion? Well, it's just, again, my opinion, but if the markets can really put in a good solid day with volume, and we have a follow-through day taking out the previous candle, and we have all of our indicators and all of our indices humming along as one, that's a different story. That's something that then I would be looking to buy the markets on any pullback for swing trades. For swing trades, the only thing that I'd be doing is looking to be selling option spreads at the moment while the market is waiting for some sort of direction here to collect some premium. But other than that, this does not look too well here. Okay, IWM. Actually, Russell was selling off in the early morning session before the markets did anything, and it just another one of our leaders not following. Taking the leadership role here. And again, coming now, just all it's doing is back testing this longer term uptrend line from November 2012. We'll have a cross here, the 20 and the 50. So I would love to see this market pop up again one more day today, and maybe a little follow through tomorrow, get all the week longs in, and then flush them out. And then that would be your buy entry. Q's had a great day. We had a couple of high flyers, Tesla. We had Apple moving higher. That drove the Qs up. But again, look at the volume. Volume is dismal. Now, you could even say there's a little bit of a head and shoulders pattern. Head, left shoulder, now forming the right shoulder. So a bit of a concern to me. So it's something that, again, we need to keep an eye on. You could still follow a lot of these sectors during the day, which gives you a good little read, an internal reading of what the market's doing. You know, if you have intermarket divergence, or if everything's humming along in the same pattern here. I did a fib from high to low. As you can see, we just literally got up to the 32% retracement here, and this is not good. This is the weakest of the 5. Now, it is a follower, right? It's not a leader of the indexes, but a lot of people look at this. A lot of hedge fund managers and portfolio managers, they look at the Dow, obviously. So we're above the 200, which is good, but now we have a lot of movement to the upside, which is needed to alleviate this downside pressure here. All right, GLD finally broke this downtrend line. Let's see if you can build a base to move. I think you could get a 128 push higher here, especially if you see some weakness in the markets. Here's the oil and gas. Now, crude is actually showing some strength, as we all know, but the oil and gas stocks have not yet. They've been lagging what crude has been doing, but that's why you need to keep an eye on some of these ETF. Here's the oil and gas ETF. Doing really nothing wrong, holding at the lower end of this horizontal channel, but again, still needs a little bit of movement. XLE, the XLE ETF, where you get oil and gas, it is actually the weakest of the sectors that we follow in the oil and gas trade, but I think it needs a little bit more work. I think if it gets back above the 50, then you're going to have a good shot for that 90 area, that high of this bearish rising wedge channel. But you can see here, nothing really good about it. We broke that higher highs and higher lows. Now we're making lower lows and lower highs. So before we get too bullish, it's going to need to alleviate this downside pressure here in the XLE, as you can see, right? Okay. Now, if it bounces, all it is doing is just creating a bear flag and should break lower again. But if oil prices hold steady, and then you can get a little bit of movement to the upside. And here's the USO. Same thing, the oil ETF got above the 200-day moving average. Now, it's up a little bit. It should take out at the opening this high. And if it does, that 3610 is going to be really pivotal, because if it does take out, you get that little thin zone here, you can take a good shot to the 37 area. Easy in the USO. Home construction, looking for the builders, consolidating here for the next move up. XHB, which is the home building ETF. Okay, doing quite well. We're above that downtrend channel. And, of course, Lennar. Lennar, I like Lennar. I like the PHM, Pulte, and I love that KVH. Those are my three favorite home builders. And I would love to buy these on pullbacks. But, again, market's trending higher, so let's see what happens. Remember, nothing goes straight up or straight down. Here's PHM. Pull back in a little bit. Nothing wrong with that at all. Just back testing this upper end of this downtrend channel. KBH, as you can see, holding up really well as well. Just sitting here, just consolidating. And, I would like to see this 1920 area go. Once it takes that out, there's a lot of room to the upside, guys. A lot of room. But remember, when you have markets are uncertain of what direction, you're going to have a lot of these stocks just kind of flip-flop here. XLF, all it's doing is back testing this 50 and 20. Again, needs a lot of work here, as you can see. But I do like the banks for 2014. Here's Citibank. Finally got above the 200, but again, had a big 3-4 days consolidating. Let it consolidate a little bit more, and then let's see if we can get above the 50. If it gets above the 50, then you're going to have a good shot for this 52, 53 area, and then possibly higher. But again, the markets need to participate. If the markets are starting to roll over, obviously the first trade risk-off is going to be one of the financial sectors. All right, and then, of course, JP Morgan, looking okay, looking better than Citibank. And then, of course, Goldman Sachs here, below the 200. Before we even look at it, we need to get back above the 200-day moving average. But again, watch these banks. Look at the ETFs that you like. Get a bunch of a basket of ETFs, and then look through them every night to prepare yourself for the next day. And if you see something interesting, go into that ETF and dial down to and look for 2 or 3 good quality stocks that you feel are in the right side of that trade of what the ETF is telling you. And then lastly, Apple. Now, Apple did really well with the whole buyback issue and Carl Icahn. This area at 514.20 broke out. But now, do you want to chase it? No, of course not. You want to wait for a pullback, let it base a little bit, and then look to buy it a little higher. Okay? All right, guys, let's see what happens with what Janet Yellen says. I think it's going to be a non-event. But I think we're coming into some heavy resistance. ES, look for the 1815 to 1820 area. Obviously, let's wait for a trigger. We don't want just price just migrate in there, and then we short it. Let's see if we get that rollover, and then we look to get short some of the markets, at least for a retest of the lows here from this current sell-off, okay? All right, have a great day, everybody. We'll speak to you tomorrow. Take care.